buy a business, and I'm glad that you've joined us today. You're going to have a lot of good information that we're going to share today. And so I'm assuming that most of you are, thinking about it. You've been thinking about it. Maybe you're just now starting to plan, that you're wanting to, have a business of your own. So we're going to do a really high level overview today because it is quite complex. And so we're not going to really be able to dive deep, but that's what we're here for. If you have any questions or need any help in the future, definitely, work with us here at the SBDC. But I wanted to start out with one kind of interesting statistic, and that is that only 2% of buyers will ever buy a business. And so that's quite a few people that think about it and just don't do it. And there's a lot of reasons why that is. And part of it is because it is quite a complex endeavor, and you're using a lot of your own money. And so you want to make sure that you're, doing the right thing and making the right decision. And so what my goal is today is to be able to help you confidently buy a business if that's what your dream is. So I'm glad to have you join us today in that process. And, just a little bit about myself. We have two speakers today, myself and my coworker, Amber Kellogg. And a little background about me. I have been a business owner for over 25 years. And I've had several businesses that I've either bought from someone, started, and then sold. So I've been able to sell all of my businesses. And so I have a very unique background in that. I've used business brokers, but I've also done it by myself, directly with the sellers. And then I also was a business broker for a couple of years. So I have a real perspective on the whole process from start to finish of how to buy a business. And I can encourage you that, this is a very exciting thing to do. And there's a lot of benefits to buying a business that's already in operation. And, I love helping people through the process. And that's what we do here is help, if you're buying, we can help you buy, we can help you sell, we can help you manage your businesses. So the SBDC is really good about that. And then also, I'd like to introduce Amber. She's got quite an extensive background in banking, and that's why she's been asked to join us today, because obviously you're going to have the questions about, how do you finance your business, and is it even possible? So thank you so much, Amber, for joining us today on the webinar.
Thank you, Nancy. I always enjoy working with you, of course. As Nancy said, my name is Amber. I'm a business funding analyst with Maricopa SBDC. We're a resource for small business literacy. We do what we can to help guide, educate, support our business owners. One of my favorite parts of my role is doing these types of things to help educate our business owners. Before working for the SBDC, I worked in the lending world, as Nancy alluded to a minute ago, with JP Morgan for just over 10 years. Prior to that, I worked with managing businesses with limited brands, alternating between the two divisions, Bath & Body Works and Victoria's Secret. I traveled all over the United States for those two companies before moving that was for 14 years. And then we've been here in Arizona for, actually it was 14 years, June 6th. So that's kind of cool. I call this home now. I do have a passion for helping business owners flourish. I know what it takes to sacrifice and the dedication it takes to succeed. I'm really happy to be a part of the discussion today. So I hope everyone gets a lot out of this, and we look forward to working with you. Thanks, Nancy.
Okay, and then.
Yeah, so, well, actually, before we begin, we probably should tell you a little bit about the Maricopa SBDC. The Maricopa Small Business Development Center is what the acronym stands for. We're part of a statewide network, America's SBDC Arizona, which is accredited by Nationwide America's SBDC. The Maricopa SBDC is funded through a cooperative agreement with the U.S. Small Business Administration, or the SBA. We are hosted by Maricopa Community Colleges. We do enjoy productive partnerships with the City of Peoria and Arizona Commerce Authority, or you might know them as ACA. We have locations throughout the state of Arizona. And as I said earlier, our mission is to guide, educate, and support small businesses, from pre-venture clients who just have an idea to businesses starting out, as well as long-standing businesses that maybe need to pivot or figure something else out to continue to stay in business. Our no-fee counseling services focus on helping launch, grow, and sustain small businesses. We like to take a look at some businesses' technical assistance that we provide to our small businesses. As you see here, the team of business analysts have extensive experience in the industries that we have listed here, such as technical assistance, disaster loan assistance, lender readiness, which is what the business funding analysts do, financial reviews, marketing assessments, and a few others that you see listed here. Nancy, I always laugh when I see this slide, and it always makes me think that, we have an analyst for that, that whole thing. It says we have an app for that. And I'm like, oh, yeah, we have an analyst for that. So it just kind of makes me laugh when I see this, because I'm like, don't worry, we have an analyst for that. The Maricopa SBDC offers research and training programs with access to tools, resources to help your business development. This slide here tells a little bit about our resources that we're able to provide to our clients, which otherwise you would normally have to pay for. You see that we have Growth Wheel. It's a sophisticated and simple software tool that helps elevate business owners, can improve and facilitate projects and help improve those projects. LivePlan is an online platform. It produces business plans. I love LivePlan. It's a simple form that helps clients who have no idea how to write a business plan to write a business plan. I love that. ProfitSense is a web-based financial analysis tool. A lot of our clients need this tool to be able to say, okay, this is what my business does, but how do I compare to other businesses? SBDC Net is a resource that we work closely with to have access to research reports. It's very analytical, such as intellectual property, trademarking, copyright, patent information, marketing, research, that type of thing. IBIS World is another really great industry standard research platform that we use in order to help business owners make informed decisions about their businesses. I think the next slide, Nancy, you're going to walk us through the phases of buying a business.
Yeah, thank you, Amber. Yeah, definitely take advantage of our resources. We have extensive opportunities for you to utilize those at no cost. So we broke this down into two phases with buying a business to make it simple for you to kind of follow along. The first phase is basically, how do you go about finding a business? And then the second one is actually putting in an offer and getting it accepted, and then transitioning to actually taking it over. So we're going to just look at that, like I said, in a high level way. And so the first phase, there's 4 aspects. And the very first question I like to ask when somebody is considering buying a business is, why do you want to buy a business? So this is a very important step in the whole process, because some people just get tired of their jobs and they decide, well, I'm going to go buy a business, but they really don't know or understand, what that means, how it impacts you and your family. So I always ask people, why? Why do you want to own a business? Because your reasons have to be very clear, and they have to be in alignment with your own personal goals as well as your family's, because this could, entail a lot of time on your part and maybe even their time. So to have their support is also important. And I just want to kind of briefly mention a client that came to us not long ago, and they said, we want to buy a business. And so we went through some of the different ideas that they had. They had multiple ideas of what kind of business that they wanted. But one thing that I noticed about them is that they were absolutely 100% sure that they were going to buy a business. Now, both of them are corporate people, or they have been. But once I read their business plan and I understood a little bit more about their personal backgrounds, I could see that their desires and their motivations were at a very high level. The wife was an immigrant, and she came over here and worked with her sisters in a nail salon. She ended up meeting her husband, and they have extended family that really relies on each other to, to be successful. So they all have decided that as a family, they're going to create kind of an empire. They finally decided on one industry, and that was a convenience store. So they are in the process of buying their first convenience store, and they're going to continue to buy more stores, maybe liquor stores, whatever, with that united goal of helping each other and then having something to give also to their children. So they're really clear on why they want to start a business, and that really is a big hurdle. And then once you've really gotten clarity on your motivations, and you know that your motivations are sustainable, then you can take the next step. But really, it can't be that you just woke up one day and you're mad at your boss and you want to quit and buy a business. There's so much to it and so much to the process. And then once you've decided that you want to buy a business, then you have to kind of really dive deep. And this can take quite some time, actually. The whole process can take a while, but you really want to dig deep into what kind of business is right for you to buy, because you're going to be walking into this as a lifestyle. So you really have to look at what your background is, what you enjoy. Some of the types of businesses that are, really easy to start and can be very successful are things like landscaping, handyman services are really popular. Those don't take a lot of, capital to get started in. You could start with just yourself, but then you have to ask yourself, do you want to be outside all the time? Do you want to be doing hard labor? Do you want to be working with employees? Do you want to have a business that is more, kind of hands off, which is a little more hard to find? But once you kind of decide, what can you envision yourself doing and playing off your own talents, then I recommend that you research the industry, because sometimes, like with the pandemic, we saw that some businesses could not survive the challenges of the new world that we were facing. And that is so true as far as with technology and other things, because certain things like dry cleaning, I always like to use. Dry cleaning used to be a really profitable and successful business in general because of the demand of dry cleaning. But now many people they're not going to work, so they don't need to dry clean as much. A lot of people don't want to deal with the chemicals and the toxins. So they're doing their own laundry at home. We have more fabrics that don't need dry cleaning. So it's, to research into the future of the industry that you're looking at is also really important. You can get some really good studies, and actually with the SBDC, we can help you with those through IBIS World and some other resources that we have to really kind of take a clear look at what that industry might be like in the future as well as now. And then I always recommend that you visit those types of businesses. I know of somebody who has a trampoline business, and it's a very large facility with a lot of trampolines and children, and so he went around and visited all those types of businesses to kind of start to visualize himself or yourself in that kind of a business, and then also to get ideas. You can talk with the owners, you can talk with the employees, just kind of have your to get a better idea of what the day-to-day experience might be, and if you're going to like that kind of thing. And then looking at the competitors, how many trampoline companies are in the area that you're looking, look at the market saturation. Some of the newer types of industries don't have as much saturation. Those are really good growth opportunities for you. And then other places like the laundry that I mentioned earlier, they had a good this particular client had a really good established business. It wasn't really growing, but maybe you don't need it to grow. It made, some good money year after year. And so, just to really get a deep dive into what you're actually going to be looking at. And then, like I said, we have these research tools for you to help you. And one of the recommendations that I have right away is that in Arizona, you can, the biggest site where people buy and sell businesses is called BizBuySell.com. They're also part of BizQuest.com. You can find DealStream, that's kind of a more national business platform. And then, to utilize the online resources that we have available. And, like I said, to kind of do some of your own personal research. We're here to help you with that process, and it can be really beneficial for you to utilize that knowledge that we have. So one of the things that I want to start out with is whenever you're looking at buying a business, immediately you're going to be asked to sign a non-disclosure. And the reason I bring this up right now is that sometimes buyers don't want to sign these things, or they don't know how important they are. And I just want to tell you that when you're selling your business, it's like somebody looking in your underwear drawer. I mean, you have a lot of personal things in there, right? And so some stranger comes up and they're like, yeah, I want to see all your financials and I want to see everything. And maybe I might buy your business, but maybe I won't. Maybe I'll just, go on to the next thing. So it's a very personal experience for sellers to open up themselves to strangers. And they have to have some confidence that you're not going to take all their knowledge and go open up your own place, or that you're going to be telling others, hey, this guy's for sale, because it can affect his employee retention. It can affect, customer base if people find out. So this is a really critical part of it. It's necessary for you to keep everything that you learn in this process confidential, where you don't tell anybody what you're doing, because it can get out on the streets and you can be sued. This is a very, very important document that you'll be signing. That's very legal. And then we're going to get into, after you have decided that you want to buy a business and you kind of have an idea of what you want to buy, then you need to look at, how can you buy that? How much is it going to cost? What is your financial situation? Can you get SBA loans? What other kind of funding is out there? And Amber is going to take that a little deeper and kind of explain to you how that process works.
I was just going to add to Nancy that it's often easier to put the cart before the horse, right? When it comes to this kind of assessment, we know we need the money, but we don't know how much we need, or if we can even pay the money back yet. So there's all kinds of things that go into making this decision, right? Well, obviously, I always like to say, you want to know something cool? Well, guess what? We help with that. So as we talked about a couple of times so far, Profit Sense is one of the things right here on your screen. It shows the SageWorks, the financial projections resource, is a really cool tool. Again, we're all about the tools in our financial toolkit. And this tool helps create financial projections that will be a part of the list of the things that required when securing a loan. And we'll go into more detail, but I just wanted to point those things out. I mean, obviously, the cart before the horse is always kind of a thing. You're like, oh, we need money. We need $1 million. Well, what do you need $1 million for, right? So we have to be able to break that down and justify that with the lender.
Well, and it's interesting too, Amber, to take note is that it's different from being like pre-approved for a home.
Oh, absolutely.
Yeah, so you can't get a pre-approval and then go out and buy a business. You actually have to find the business first before you can get the pre-approval, which is a little different and a little more, it makes it a little more challenging, but there are some basics that you need to be able to even get to that point.
Yeah, and we do have the ability, our lender referrals that we partner with do have the ability to do what we call a pre-flight. So if we have an idea, but it's not like a written in stone kind of thing. So, and it does take anywhere from 30 to 45 days to secure a loan of any large proportion. So, and that's with regular lenders. Now some may take quicker, but you're absolutely right.
And so here we have some of the different types of funding options. We always recommend, if you can use your own money,
Yes.
if you can get credit cards, maybe, look at your friends and family, because initially it's not going to be as easy to have a bank fund you unless the financials are really good and other things have to line up. But definitely you will have to have some money to put down as a deposit. You're going to need some working capital. So just realize that you will need to probably tap into some of your own cash that you have on hand. And then seller finance, a lot of people think, oh, maybe the seller will just finance me. I have not yet met any seller that ever wants to finance anything because it's very risky. And they typically want to just cash out and be on with it. But banks often ask that the sellers have some skin in the game. And so, there is the possibility that maybe you can get seller financing. And if you find somebody that actually wants to finance the whole thing, I would say that's a really great opportunity. But they typically want at least half down before they seller finance. And then the banks usually, what is it, about 20% that they like the seller to have a little bit of financing. Mm-hmm. And then you've got obviously you can get bank loans much easier than you can with a startup. So if you've already got a business that's showing good financials and they are, a viable business, and the bank can look at it and say, oh yeah, you've got X amount of money, this will cover the amount of credit borrowed. It is possible, and you'll, that you can work with a bank. And that's one of the benefits of actually buying a business that's already in existence. And then what a lot of people do, and I've done this myself, is to just use your home equity credit line. And that can be really beneficial as well. Any other comments about that?
Yeah, I love that list, Nancy, because it necessarily doesn't mean you have to secure a loan to start your business or to have a business or to buy a business. My lender friends are probably cringing at me right now, but it is their fiduciary responsibility to make a good loan, right? And a good loan means that they want to make sure that you have the ability to pay back the loan and you don't bite off more than you can chew and file bankruptcy in a couple of years, right? You want to make sure that you afford to pay that back. So they don't want you to just dive right in and just get a loan. They want to make sure, like you said, if it's making a profit, it has to be worthy of the purchase, right? But going back to that budget that we need to make sure that we come up with enough money to comfortably get started. We don't talk enough about budgets, I feel like, and our business owners, we want to make sure that they keep that in mind. I want to say comfortably, because comfortably get started, meaning I say that loosely because a business owner knows that it's usually strapped the first couple of months and even the first year, but being mindful of your budget, where you can make cuts without losing your vision, right? Or that kind of thing. We want to make sure that we tighten our belts and sacrifice a little here and there. That's, to make the dream happen. That's what we have to do as a business owner. You've owned multiple businesses, and we have quite a few of our peers that have opened businesses without getting lending, and that's been a blessing for them. But that's called bootstrapping, right? Like we tighten the straps, and we want to make sure that you've heard that term. It's a lending, term to make sure that if we're bootstrapping, we're tightening our reins, right? I just wanted to kind of throw that in there. But now that we know how much money we need, I'm sorry.
Oh, Amber, I just wanted to say too, that's why I really encourage people to invite their entire family into the process, because
absolutely,
if you're going to be bootstrapping, they're going to be bootstrapping.
Yeah, and I love your story earlier about the family coming together. That's so inspiring, and what great motivation to leave a legacy for your entire family. I think that's great.
Right.
Yeah, but great ad there too, Nancy. Well, now that we know how much money we need, we've created a budget, and we also know what profit cents. We use profit cents, for example, to create our projections. Let's see what we need to know about securing a loan. Nancy has up our slide of the 3 C's. As a business funding analyst, like I said earlier, I like to educate our business owners on what lenders require in their ideal clients. Of course, lenders have an ideal client that they look for, and typically they talk about the 5 C's. Now, I don't know about you guys, but I know that a lot of times when people start going on and on and on about the same thing, you kind of lose their way and it kind of goes over people's head and you just kind of lose interest after a while, after probably the third C. So, you know, I always joke about my tire guy knows tires, my burger guy knows burgers, right? And just this morning, I was talking to a client and we talked about that. We talked about you're an expert in your field, but this is what we know. And so I broke it down and I try to make it a little bit more simple to come up with three things. So 3 C's in my experience that are most important that lenders cannot mitigate, or meaning they can't get past, or they can't do without. Getting ready to talk to lenders, we know is crazy overwhelming for business owners, especially if you don't know what you're talking about. So we're going to break it down kind of in a simplified version. Just understand that lenders go through an extensive risk assessment about your business. Like Nancy said, it has to be profitable. It has to be worth something and more than just the next year. It has to be growth profitable over the course of the next couple of years. And we want to make sure that you're in business a long time. If we can self-evaluate ourselves among these 3 things and we feel like we're in good shape, then we can move forward with buying our business, right? The very first thing is credit. That is the first thing we look at. Lenders want to make sure that you're credit worthy. Keep in mind, that means good or bad credit, right? Your credit history, bankruptcy, short sales, all of those make a huge difference. Even though it maybe 10 years ago, it's still visible on your credit. People are like, oh, you can't see it, it's 10 years. Disclose it because they will find it and they will see it. So I always make sure that my clients know that. I'm sure you guys want to know where the sweet spot is and the best score. And we always look for something that's around 680. A good credit score is 680. Now, don't fret if you happen to have a 640 credit score, because there are some lenders that will consider you. You do have to explain why it's low, but it's possible if your credit score is around a 640 to get lending as well. Again, like I said, don't try to hide anything, because if it's on your credit score, the underwriters will find it. The terms might not be as favorable, but at least you'll get some sort of lending. Let's see, those kind of things are considered high risk if you have low credit score, bankruptcy, short sales, that kind of thing. So the banks usually don't want to take on something that's unacceptable risk, because they have to mitigate risk, right? So that's why we talk about these 3 things. If you have good credit, if you have bad credit, they'll let you know whether you need additional guarantors or more money down, or we can come up with a different action plan in regard to your credit to get lending. Now, the second C is cash flow. Lenders want to make sure, like we've said a couple of times thus far, that you're making money to pay back the loan. And that's basically what the business needs to show, is that you're able to stay afloat, right? And that's why when you're looking to buy a business, you're looking to see that they're making a profit, because we want to make sure that it's in the red, because if it's not the red, then why are we buying the business? And why are they exiting? Well, they're exiting the business because they're not making a profit. And so you want to make sure that they're making a profit. The bottom line must be a positive number, right? It's vital to also have a conversation with your CPA or your accountant to let them know that you're looking for lending. That's huge, because we can't have it both ways. You can't have easy to not pay taxes that our accountants and CPAs are so easy to do, but then we also want lending, because then it's not, you can't have it both ways. We want to make sure that we're showing a profit to show that we can afford lending. The rule of thumb is that lenders want to see for every dollar that you're requesting to borrow, that you make a minimum of $1.25. With lenders tightening their reins post-COVID, right? Some of them are now looking for $1.50 for every dollar that we're asking to borrow. So it's significantly higher. And one of my peers just shared with us, a couple of days ago now, that it's becoming even more tightening on the reins, that lenders are kind of not wanting to mitigate very much risk when it comes to it. And it's almost kind of catch-22. People say that the lenders want to lend to people who don't need the money, but it's actually, they want to lend to people that can pay the money back. So that's
And
kind of,
Amber, just to put this out there as well. So when they borrow money for a company that's generating X amount of cash flow, if for some reason your business doesn't succeed, you're still responsible for that payment, even if you have to close the doors.
yeah.
So they want to see that you can also afford that scenario, right?
Yeah, that's why we say we want to make sure you have long-term financial strength in the business, because they look at your personal finances, of course, because they want to make sure that if the business folds, you have the ability to still pay back this loan and you don't file bankruptcy on the loan, right? And you don't want to do that on a SBA loan, because then it kind of ruins your ability to get another SBA loan. So
So
yeah,
we
that's
always
right.
recommend keeping your day job as long as you can,
Yes.
or have your family keep their day jobs.
Yes,
Don't
I
everybody
say that
quit.
all the time. I say
Yeah.
that all the time. Don't quit your day job. I tell my friends that. Yeah. The third thing to look for is collateral. Lenders want to see that you have skin in the game, right? They want to see that that you have money to put down. And there's no such thing as 100% financing. What do you bring to the table? Do you have assets? Because they're going to look at, if you own a home, they're going to probably ask you to put your home up for collateral. How much money have you already invested in the business? Because that's equity that we can take in consideration as well. And of course, it depends on the type of loan, right? So typically all business assets, or if you see on a loan ABA, that's all business assets. The business owner is the guarantor. And that means everything that the business owns is all business assets is the collateral of the business. Remember, I also a second ago, I also earned that if you can't pay back the loan, the owner assumes responsibility of the balance of the loan. So just keep that in mind. That's why, again, I always say don't quit your day job. But Arizona is also a community property state. So they do take into consideration the spouse or partner's income, whether they are owners or guarantors of the loan at all. So like, my partner or husband would have to be privy to me getting the fact that I'm getting a loan, and they would probably have to sign something. If it's a real estate owned, it makes it a little bit easier because the real estate itself is collateral, even though you still have to have money down, but it's an equipment loan. The equipment is partially used as collateral. It is very situational. So it depends on what collateral we put up, depending on the loan to value of what we're putting up for collateral. Money down is always required, anywhere from 10 to 30%. It depends on the loan type. Well, let's see, we've talked about the 3 C's. We've talked about credit, cash flow, and collateral. Now I think that the Maricopa can help guide you, Maricopa SBDC, we can guide you through all of those. Our next slide does show the documentation that's required. That's what Nancy has up right now. And gosh, we're all about tools. And I know that you guys have seen a couple of things that are on our slides. We're all about tools because we want to make sure that we have, all of us as business owners have a financial toolkit. This one is a lender's checklist that the AZ SBDC has compiled, kind of a general list. And again, this is not the know-all be-all list, because I always say at the 11th hour, a lender is probably going to ask for a handful of more things. And that's me just being facetious, but that's usually what happens. They need a couple more things before they can actually sign on the dotted line. But everyone usually panics when they see this long list. Do you agree, Nancy? Everyone's having a moment going, overwhelming, not happening.
Right. It's even worse than buying a home, I think.
Right. Yeah. But keep in mind, it's a dollar amount, right? And are you going to lend somebody $100 if you know they can't pay it back? Right. It seems like a lot, but if we collect everything on this list, just keep in mind, they're going to probably ask for more. And I always tell business owners up front, don't get frustrated, because they're probably going to ask for something more. So it's not a surprise. So I always just tell everyone up front, just keep that in mind. Typically for our position of business funding analyst, we do an analysis for we need to do a preliminary analysis. Why can I talk all of a sudden? Preliminary analysis. We need a comprehensive business plan. And I say a comprehensive business plan because we need to make sure that it has all of the things in a business plan that it needs: the financials, the executive summary, your vision, all of those things. And that's what our tools that we showed earlier, live plan and growth wheel that we showed you earlier. We also need a 2-year monthly cash flow projections, current balance sheet that balances. That's important because your balance sheet has to balance, and a current profit and loss statement that shows a profit. Obviously, we said that earlier. We don't need a negative number because a lender is going to see that negative net profit or net income and say, well, we can't lend to you. The other thing that I always point out is that taxes have been filed, it's necessary to have at least 3 years of the most current tax forms. And that's one thing that, Nancy, I think you talked about earlier, is that sometimes sellers are a little bit hesitant to give their tax returns to a potential buyer, because it is like looking in your personal drawers, right? But we do need to see that to take into consideration if it's worthy of purchasing or not, right? The lenders will ask for an extension letter. If you haven't filed, they're going to want to see that. Once we review these documents, we make sure there's no red flags, nothing that, flashing lights that say there's there's something that's wrong. And then if there's fine tuning that's needed, we'll help continue to gather information with you, but we'll help fine tune those things to help you get ready for the lender. But it is up to the business owner to create that documentation that's needed. The SBDC can guide you through that, though. We can help you look at it and make sure that it's in good shape before we send it to a lender. But we can't guarantee that you're going to get a loan. If we help you get this package together and wrap it up in a bow to a lender with confidence, it's not a guarantee that you're going to get a loan, because it depends on a whole bunch of things, the 3 C's that we talked about, and what the lender is willing to mitigate, as far as the risk goes.
Well, and just from my experience as a business broker as well, many times small businesses just don't have good financials. So
Yes.
we have to kind of build the credibility
Yep.
along with that for the banks to be able to have confidence
Absolutely.
in offering that loan.
Yeah, and we have the tools. We have templates that help our clients. And again, they have to put in the work, right? Like, that's part of a business owner. You have to put in the work, but that's part of buying a business. Now, I think our next slide, Nancy, you're going to go over the phase 2 of buying a business.
Right. So up to this point, we've been talking about what it takes to actually get to a point where you're going to be making an offer on a business. And at that point, you've done a lot of work already. And so we've broken it down into 4 simple steps. Obviously, there's really never anything simple about buying or even selling a business, but working with us at the SBDC, we can really help this process facilitate. And it takes a lot of the fear factor away. If you have a question, you can call us and we can tell you, yeah, this is normal. This is what you do in this case. So we're here to help you, not be that 98% that gives up after a certain point, because there's a lot of points where you could just give up. So that's why now two of the biggest things to look for when you're buying and selling a business is motivation. Your motivation and the seller's motivation, because without motivation, it just likely will not come together. So if you're kind of just kicking tires and running around, I can tell you're probably just wasting your time and a lot of other people's time until you get to the point where you're ready to pull the trigger and do whatever you can to make it happen. I wouldn't even really bother, going down any path other than maybe looking at BizBuySell. And then the seller has to have a lot of motivation. Sometimes sellers say, if I sell it, I sell it. If I don't, I don't. That is not a motivated seller. And they have got to jump through hoops to make it happen as well. And if they're not motivated, you're not going to get anywhere. So my recommendation is always to whoever you're working with, business broker or the seller directly, hey, why are you selling? And it could be health problems. Obviously, that's a strong motivator. It could be that they want to retire. They're just tired. But they have to have a motivation. So that's just a little caveat I am putting in there for your awareness. And then to help you in the process and to achieve your goal of actually sitting at the closing table and signing the papers and someday owning your own business, you really need to have a good team together. So I would recommend, or we would, obviously, that you enlist your SBDC counselor to help you through the process, because we're very knowledgeable about all phases of the process. And it can just really give you much more confidence and success. And then have your accountant where they can review some of the documents and help you make decisions as far as tax allocation and that kind of thing. You may need an attorney. Typically, if you're not using a business broker, then definitely I would recommend an attorney. You can use a business broker and an attorney. That can kind of get a little convoluted. But business brokers are typically going to be representing the sellers. So when you contact them, they're normally going to be the one that you're working with. And they are very knowledgeable in all of the legal aspects. And actually, I was going to go over kind of what a business broker does, because, it's it can be kind of a contentious relationship sometimes. Business brokers are extremely busy. They don't want to deal with people that aren't really ready to pull the trigger or don't maybe know what they're doing, because they've got a lot of work to do and they're working with their sellers. They're not really, working with buyers. That's not typically how it works. It's not like real estate where you have a buyer's agent. So they're normally representing the seller. And then when you contact them, unless you have your own broker you've been working with, they're going to be representing you as well. So it's basically a dual agency. They prefer that, and they don't really, even though they need to operate under the real estate board, they don't really have to sometimes accommodate some of those dual agency regulations. They always have to represent you with your best interests in mind, but they are responsible to the seller. So they're really working for the seller. Just keep that in mind. And they, are a good resource for you to work with, but they want you to be ready. They want you to be knowledgeable. They want you to be able to have the money and to move forward. Otherwise, it just wastes everybody's time. And that does happen quite often in this process. So once you find the business that you like, and you are ready to make an offer, now, obviously, if you're working with a business broker that's representing the seller, they're not going to be, wanting you to make a really lowball offer. But this is where I always tell people the value of a business really is what the buyer is willing to pay and what the seller is willing to take. There's no magic number that says this business is worth X, because it's very subjective. I mean, there's so many ways to look at the value of a business. Everybody will come up with a different amount, but the seller has an amount in his mind. Typically, it's more than what it should be. They can be oftentimes very out of the ballpark. But, go ahead and just make that offer and see where you can at least start. And you're going to have to be able to, be sure that the cash flow is there to justify. Now, I do want to just throw this out quickly. I have bought businesses where I was not looking at cash flow as the main metric, but in Arizona with business brokers, this is pretty much what they look at is sellers, what's called seller's discretionary income. But there could be a lot of other motivating factors for you. They might not be generating a lot of cash flow, but they have your clients that you want. So that's valuable to you. So it's really a personal decision about what the value of that business offers you. And so it's subjective, and anything goes really. Just put it out there and see what you can accomplish. And when you do have your offer accepted, that's just the beginning of your due diligence period. You don't have to move forward. You can find a lot of things about the business that maybe you're not comfortable with, that you don't want to move forward with. But just a quick overview of the things that you do want to look for, and that is obviously the financials. And like I said, a lot of business owners don't have good financials, but there are other ways of verifying the income. You can look at tax, sales tax, and compare it. You can go into the business and watch the transactions. And the reason I'm saying this is not every business owner documents every sale. Say it's a high cash business, they may not. So you're going to use your own discretionary information when you're analyzing the income. Now, if you're going to be funded by a bank, they're going to look at the hard numbers. So they need to have that. But sometimes in smaller businesses, you're not going to have those hard numbers. So you just piece it together like a puzzle. You can look at what kind of contracts they have. Look at customer information. Who are their customers? Are they all going to leave if Joe, the landscaper, isn't the face of the business anymore? Look at the employee retention and see how committed they are. Are they going to leave once you step into the business? Now, none of these things have to happen if you handle it properly. But you also want to look at any past legal issues. I've had businesses try to sell and they know that there's going to be a road being built right through their business in about a year. So you need to really do a lot of due diligence as far as, the impact on the business itself, anything going on in the area. Look at their physical assets. Are they in good shape? A lot of people will say, hey, I have all this inventory, but half of it isn't even usable inventory. You don't need to pay for that inventory that you're not going to use. Do they own their real estate? If so, that means that they're not paying rent like you may have to pay. So you have to take those things into consideration. And then the intellectual property. And I always recommend as well that you look at the reputation of the business. The first thing I would do with any business is look at them online. See if they're, if they've got good reviews. Now, if they don't have good reviews, that's not a bad thing. It's just a negotiating point. And you can use that and come in as like, now I'm taking over and I'm going to be better than the other guy and we're going to grow this business. So it could be actually a positive thing. But, not necessarily. I mean, you don't want to buy a business that has bad Yelp reviews, for instance, unless you are determined that you can turn those around. And a lot of sellers will say, my business is worth X because if I did this, this, and this, it would make a lot more money. Typically, you do not need to be looking at what it could have done or what it should have done because the seller tells you. You are basing the information, your decision on the information that you have currently. Now, it might be something that you can grow, and that's always a great thing in your toolbox. But if, as a negotiating point, potential is not a strong, upward potential on that. So, and then looking at the customer base, are they going to stay? Just anything you can think of during the due diligence process. This is all going to be up to you, and you should be able at this point to be able to ask for anything to validate and verify your decision, because you're going to be putting your time and money and life blood into this, and they should be forthcoming. And I didn't point this out in the beginning. I should have. Really try to make friends with the seller. There's a lot of opportunity to lose confidence and to feel like maybe they're hiding things, or they might feel the same way with you. There's a lot of opportunities to have the relationship go bad. So my general recommendation is that you just assume the best, and they typically want to hear how great their business is, how great they've done their business, just really pump up the seller and become their friend, and as well as the business broker, because there's a lot of, like I said, opportunity to have it go astray. So, and then the last thing is once you've gotten it accepted and you're ready to take over, the transition period is very important, because you want to make sure everybody feels safe and comfortable, and that the employees don't bail and the customers don't bail. So a lot of times you'll be getting a training of a commitment from the seller. A lot of times it's like 30 days. But if you have a business that really is, the seller is the business, then you want to make sure, or see if they'll stay on a longer period. And the more you pay for that business, the longer you have a right to have that owner interfacing until the transition is complete and everybody's pretty much still intact. That's the goal. So typically employees will be really afraid of losing their jobs. So going in and just telling them, hey, it's all going to be the same. Don't worry. We're not getting rid of anybody. Even if you do plan on doing it, just don't do it for a while. Be really upbeat and positive, win their affection and their trust and confidence. And that's talking about everybody, vendors, employees, customers, everyone. And assume that positive leadership role. And one thing I will tell you across the board is don't change the business the minute you get in it. Just get acclimated, wait, 3 months, 6 months before you start implementing changes, because that can be the, it can really kind of start a landslide in the wrong direction, and we want to avoid that. So after you've done that and you're on the right path, like Amber mentioned, you need to have a business plan. And from that point, you should have all the information you need to be able to do projections and to be able to help the bank, trust in that business, that it's a good investment for them. You're going to want to, get your licensing, any kind of licensing that you need. You're going to want to choose your business entity. And so there's all of these things that you can, have your accountant, us at the SBDC, and your attorneys help you get prepared with all the legal documentation to be able to take it over. And then I just threw this in. This is a client that I was talking about earlier that they are well on their way now to living their dream. And they had no idea what they wanted to buy in the beginning. And Amber pointed out that, you really need to be able to identify one specific business to be able to get that funding confidence from the bank. So they did decide on the convenience stores. And then they would call regularly and we'd have meetings, and they would, one of their questions was, how do I write a letter of intent? And I just said, just have your business broker write it. I mean, that's what they're there for. And that, otherwise they're going down all different avenues. So we can really help you streamline. And so it really feels good to have been able to help this couple and many others be able to achieve their dream, because it's a big dream and it's a big accomplishment. Now, one of the things that I found that's available that you might want to just grab is this book by Ed Pendarvis. It's Buying a Business, and it was free on BizBuySell, which will be your resource anyway. So go on there and see if you can just download this, and it'll give you some background. It's a little bit of an older book, so it's not really necessarily up to date, but it'll give you a lot of the steps that we've gone over today. And then Esme, I don't know if there's any questions that people would like us to answer. Do you have any?
So far, we don't have any questions, but if anyone has any questions, you could go ahead and put it in the Q&A box and I can let Nancy know.
Yeah, we'd love to be able to answer any questions. And then, if you are ready and you want to sign up with the SBDC, we're here to help you. And it's pretty easy to do. All you do is go on our website there at the Maricopa SBDC, and it'll take you to a box that says initial counseling session, and you just click on it and fill out some information. Then you'll be assigned a counselor, and then you'll be working with us, and you'll be well on your way, basically. And Amber, do you want to talk about some of the different webinars that we have coming up?
Yeah, let's see, we have a lot of really great, like Nancy just said, if you go to our website, there's a lot of really great things that you have access to. And the webinars are really cool training and learning webinars that are coming up. Learn the basics of Google Ads. So we grow with Google. That's something that we've been a couple of webinars now that have been very productive. That's on July the 20th. So that's next Tuesday. Employee retention tax credit is a huge topic right now. That's going to be on the July 27th. I encourage everyone to be on that if you're a business owner, current business owner. Reviews matter, how to manage and optimize your reputation. That's pretty big too. We talk about Yelp a lot, and we talk about, when people give you reviews and things like that. So that's a really great webinar to attend on August 5th. And then keep looking at the webinars, because we have some coming up, even more that hasn't been listed yet. So just keep looking at those, because they're very beneficial and they're at no charge to you. So
it can give you a lot of the basics, but some of the people on the webinar today also do own businesses. And I always tell people, if you can grow your business through acquisition, that's really great. And we can help you with that as well.
Tell your friends.
Partners, and just growing your business through buying companies is really advantageous as well. So
yeah, absolutely.
Good. And then
and with the Maricopa SBDC, like we just said, there's a lot of resources, but there's COVID resources on our website, the training events calendar. Make sure you register for those events in advance so we kind of know how many people are coming, and we can prepare for that. But the website is right here, the www.maricopa-sbdc.com. Also, there's a lot of things that business owners need help with. We know that. I mean, there's so many things that we can get as a topic for one of our webinars, and actually if you have suggestions, we'd like to hear those too. But maybe you don't know who to ask when you do have questions. And guess what? We always say the SBDC is here to help. And Maricopa SBDC is the largest center in Arizona. So we have a lot of analysts that are happy to help and that have a lot of expertise listed here. We have updated resources. So make sure you go to the website repeated, often, so you can see the additional resources that we have related to COVID funding and grant opportunities. Grant opportunities are a huge thing that people always ask us. We keep that updated as well. There are a lot of things that are on the website. So I encourage you just to go there and take a look. We do encourage you to follow us on social media platforms. We have LinkedIn, Facebook, on our social media platforms. The last thing I always like to add is that one of my friends once told me that the only bad conversation is the conversation we didn't have. And it really impacted me. And I love that because it really fits our situation, because if business owners don't have a conversation with people who can help them, then they'll never know what they don't know. So keep in mind that, let Maricopa have that conversation with you. So keep in mind that we are working remotely, but contact us and request for counseling by visiting our website. And again, the website is listed here. So just let us have that conversation with you and let us help you, whether it's buying a business, whether it's any of the things that we listed for technical assistance in the beginning. We're here to help, and we're happy to help you.
Yeah, thank you, Amber. And I hope you all, got a lot out of this. Once you do buy the business, we're here to help you with that process of growing it and sustaining it as well. So we're just really happy to be able to provide that no fee service to our business community.
Yeah.
And
lots of great information, Nancy. Thank you so much for sharing with us today.
Yeah, and I think Esme, did you have a couple words to add to that?
So I just wanted to say that there were no questions. It seems like everyone's ready to go out and buy a business. So yeah, we didn't have any questions from anyone, but thank you, Nancy, and thank you, Amber, for today's presentation. And for everyone else, I want to let you know that I'll be sending an email either today or tomorrow with today's recording. And there will be a survey at the end. So once this ends, there'll be a survey. If you could please fill that out, we'd appreciate any feedback that you provide us. But yeah, thank you all for joining us today, and we'll see you in our upcoming webinars.
Thank you, Esme. The one last thing I wanted to say, I always want to make sure that we thank you and Donna, who is our background people that help us. Esmeralda and Donna, they are our two operations people that always make everything go so effortlessly. And we just really appreciate their efforts and their partnership in making our webinars happen. So thank you. Nancy and I both want to thank you both for helping us.
Yes, thank you.
Thank you so much.
Thank you.
You're welcome. Bye, everybody.
Bye.